So if you need to, let's say, borrow $500,000 from somebody, what you do is you present it as if it were an investment to them, where they can actually make money.
Ryan, I have a question for you.
You bet, Angela. Thank you.
If you could just go over very quickly again, because it's something that I would like to introduce to my buyers again, but I want to be a little bit more fluent. And whenever I ask them if they have someone in their family, a rich uncle, somebody that can give them some additional money for a down payment or to help pay for their home, and how they can earn that money back within a few months. It's what I've been trying to understand, that you've been teaching us over the months, and I just want to make sure that I'm understanding what you're telling us.
Yeah, I think great question. Oftentimes in this market, our normal home buyers that have, FHA financing or VA financing or need some closing costs, there are markets where those people can get a home. This is typically not one of them, right? So understand that. If you spend a lot of time trying to show them property and writing offers and failing, that's when, you start to realize, wait a minute, this is a very tough market to operate in. So it's really important that up front in the buyer consultation, you set proper expectations, that you've been in trainings in your office which you are right now, where you've heard from, trainers and other agents alike that, if you need closing costs, if you've got VA financing or FHA financing or anything special you need that's out of the normal that makes your offer otherwise unclean, it would behoove you to go out and look for other sources of money so that you don't have to compete so hard to get the home, and then go ahead and refinance into more long-term desirable financing later. And that's what lots of home buyers have to do. And I know this seems odd and awkward to a lot of people that have been in the business for less than 15 years. But if you go back to 2004, 5, and 6, this is something that was very commonplace during the last housing boom. Because in order to compete against, 3 other, 10 other, or 20 other offers, oftentimes you have to be cash. So it's very important that we explain to your buyers that you're going to be competing against all cash offers, either from other people, from hedge funds, from real estate investment trusts, from investors of any kind. So to do that, oftentimes you need to be cash too. So the first question I ask every client is, do you have access to a lot of cash to borrow for a short period of time? And again, the whole idea here is to borrow that money, buy the home cash, turn around and refinance it later, okay? And examples, and I usually because they're stunned by this comment. Most people are stunned by it, just like a lot of you are already feeling it would be an uncomfortable thing to say. And so that's when you'll say to them, maybe a friend, an uncle, a family member, someone and it's someone that you want to make it a win-win proposition for them. And I'm going to explain to you how, because I know it's to go up and ask for money for free is not something no one wants to do. No one wants to beg for money from people they know. But what you do is you present it as if it were an investment to them, where they can actually make money. Okay. So if you need to, let's say, borrow $500,000 from somebody for a period of 60 days or 90 days, whatever it takes you to get offered, get closed on a house, 60 should do it. And then you turn around and refinance and are able to pay them back ultimately $520,000, $530,000. They're going to make $20,000 or $30,000 in just 2 months. Does that make sense? And that's big money. There are a lot of people that will do that, especially when it's secured by residential real estate. It's a pretty safe bet. Make sense? Or
thank you.
It's always good for agents to have access to hard money loans as well too. A hard money loan, this is something you definitely, in my opinion, need to know some hard money lenders. I think most agents, just top agents, all do. And these are people that'll loan money for you, usually a shorter term, a year to 2 years max. The interest rate they charge is typically 5 to 6% above the going rate of a conventional loan. So right now they're going to be 8, 9, 10%, which sounds high to you. It sounds high to you guys, not to me. But To you guys, it does. Not to me, because these were the interest rates of the 90s and the 80s, and they're very cheap, hard money rates. And then they can get into the house, they can lock in, and then they have time to refinance. And once they refinance, they pay off the hard money loan. If you do not have access to a local hard money lender, typically they do need to be local. They need to be where you are, because hard money lenders don't like to lend all over the place. They like to know loan nearby, because then they can see the property they have as security. If they need to foreclose and takes action against it, it's very convenient. It's by them. So you need to find local hard money lenders, which means you're going to need to talk to real estate agents that flip a lot of properties. They almost always have multiple hard money sources. Real estate agents that do a lot of construction have hard money sources, things like that. Having those in your pocket over the next 5 to 10 years during this rapid low inventory, rapid price increase market, it's going to be real important, because you're going to be able to put deals together where other agents can't.
Thank you.
That makes sense. A hard money loan is like another word for a private bridge loan. You're bridging the gap between them and getting long-term financing. Make sense?
Yeah, thank you so much.
You bet, Angela. No problem. So good thing to ask right up front. Not to mention that also sets the expectation that they know that they're going to have a tough time right off. They're not going to blame you. They're going to realize they've got a blemish here. And it's such a serious blemish that you're asking them about it. Because we got to have that conversation, man. If you don't have closing costs, if you don't have this stuff, it's going to be a fight, right? And then naturally, they're going to say, well, I'm just going to wait till I can use this again. Well, that's when you need to get all the charts we've shown you about how housing prices are going up and how it's going to be much more expensive then. They certainly don't want to wait until people will take closing costs again and accept closing costs.
Brian?
Yeah. Hey, Walter.
Hi, good morning, or good afternoon, I should say now. Hey, quick question for you. Knock.com, are you familiar with them? They do the bridge loans. They do kind of it's a finance your existing home and help you buy the next, and they give you 6 months.
No, tell them about it. Tell them about it. I've heard of companies like that, but
you know, I just went through their certification program, and I've not dug into it yet. I'm just kind of just trying to get my feelers out before I start really talking about it. I actually got it from Sam. But what they do is it's called knock.com, and what they'll do is they carry your new loan. So if you're buying a house, they want the loan for the new house. And it's going rates, it's not out of line. Then you're going to pay 1.25%. And what they'll do is they will, for that fee, they will in a sense cover your existing home for 6 months. And then they either buy it or you have to start making the mortgage on your existing loan. And depending on how much equity you have in that existing home, they'll actually cover down payment, they'll cover closing costs, they'll cover repairs. So you can actually stay in your existing home while you do the work on the other one. And like in today's times, really right now, we're selling homes, within 6 months, it's going to sell. If we start to see the market change, I might get a little bit more concerned. So I don't know. I was kind of interested to see if you or if anybody else had heard, anything pros, cons, or what have you. I'm kind of liking it, so I'm favoring it. But I thought I would throw it out there and see what everybody's thoughts were on it. It's a great.
I like it. There's a lot of competitors out there. I just threw a link in the chat called Homeward. This is actually a company started by a very high producing agent named Tim Heil. Who is out of Austin. He's a Keller Williams agent in Market Center #1, actually. And he's the #1 agent in that market center. And he started this, and big article in Inman on it about probably 30 or 45 days ago, where he secured some monstrous funding for this program. And it's exactly what you're saying. It looks like it's a direct competitor to knock.com. Same deal, same exact deal. So you might want to check that out too. And those are bridge loans. They're private bridge loans where people are pooling money to secure it so people have money to buy. And then in their short-term bridge loans to bridge the gap for you to get long-term financing. And that's a new emerging market right now. As you can see, as Walter's saying, as we see there, that's great. Thank you for that. Thank you for that. This would be a competitor, Walter. I would check that one out too. Compare them against each other.
Cool, I will. Thank you.
You bet. Good stuff. Good stuff. But that's the idea, because we are now in that universe, guys, where it's just not going to, you walk around with VA and FHA financing or buyers who need closing costs. It's just not going to work anymore. It's just not going to work anymore. So we're going to have to switch it and change our strategy. And to do that, we're going to have to explain it to them too, because the long 12-year period of being able to do that is over. And now we're moving into what will be a much longer term, low inventory market where you're not going to be able to do that to compete. And boy, we don't want people waiting. We don't want people waiting because prices get very, very expensive by then. Okay, I see a question, it looks like from Daniel. When it comes to refinancing, how soon are buyers able to refi through a more conventional loan? As soon as they can, Daniel, as soon as they can. They can refi right away. I mean, there's very rarely any type of prepayment penalty on private financing. That would be the question. I mean, you could always ask the question. Yeah, or delayed financing. There you go. Yeah, and Hal's throwing in there refi as soon as possible. Right. Yeah, agreed. Very rarely is there going to be a prepayment penalty on any of that. And you might want to ask and check the very short loan docs if you even have any on private money. You usually don't see that. So you can refinance, the minute you close on the other property if you want to. Sound good? Okay, let me show you something here. Okay, so Albert let me just back up. 2 things on the hard money. Number 1, securing hard money. Number 2, asking if they have anybody with cash and telling them how they can make it a win-win. I just want to rephrase that. Okay, so those 2 things, Angela, make sure we have that conversation too. Tell them they can ask for money, and to help them with the uneasiness of asking, telling them they can ask for $500,000 and tell them they'll pay them back $510,000. Most people with that much money have it sitting in the bank. Well, that's just going to sit there and earn barely any interest at all over 2 months. Well, you can make them $10,000. That's definitely a win-win. That's an investment. That's bringing an opportunity to someone. It's not just asking for money. So you're helping them with that. Then they get calm about it. Okay?
Yeah, for me, it was my brother's helping me out, and he's willing and has, an additional 20. He's already giving me 10, and I don't have to pay it back. He's more gifting me, but an additional 20 would be fantastic, and I'm willing to give it back to him and tell him I can give him 10 in addition. So I just want to be sure and be more eloquent in explaining what it is that I can do for him.
There's one other consideration that I will throw in there that I'll give to you. There is this little thing, if you buy a house for $500,000 and you're going to pay them back $510,000, well, where are you going to get the extra $10,000? Okay. Well, typically you buy that in this market, especially you buy the house for $500,000, you close 60 days later, get it refinanced 90 days later. Oftentimes it's going to appraise for the $510,000 and you're going to get $510,000 cash and be able to pay them back. However, if it doesn't happen, that's what I'd try for. That'd be my plan A. My plan B is, let's say it only appraises for $500,000 and we pay him back $500,000. I still owe him 10. Now I'm going to give him a second on the house for 10,000 and maybe pay him back slowly over 2 or 3 years. A second deed of trust, a second mortgage on the secured by the house. And I'm going to pay him back slowly. So that's my plan B. So either way it works. I know some of you were thinking that and I never got around to saying it. So if it doesn't appraise for the full amount to pay them all back, you can always close, pay them the amount of the first, and then hold back and give him a second to hold back, and then arrange terms to pay him back that a little bit more slowly over time.
Yeah, that's great, because he even said that, if I need a couple of years to pay it back, that works. I just hate owing money.
That's great. I think everybody wants to meet your brother, Angela. That's wonderful.